Hey everyone, welcome back to Corporate Decoder, the place where we decode the whispers of Wall Street and turn corporate jargon into plain English. Today we're diving into Kennedy, Wilson Holdings, or KW as they're known on the stock exchange. Get ready because this filing is packed with some interesting moves in the real estate development world and will break down what it all means for their finances and future. Also, if you are new here and love getting the inside scoop on companies, make sure to hit that subscribe button and join our Discord community linked in the description below. We have some great discussions happening there all the time. Alright, so Kennedy Wilson Holdings Incorporated, a name you might recognize if you follow real estate investment. They've just dropped a Form 8K filing, which is essentially a report for major events happening at the company that shareholders need to know about right away. And what is the big event here? Well, it looks like they are making a pretty significant move to expand their multifamily and student housing development platform. They entered into an agreement to buy up a whole apartment development business from Toll Brothers Incorporated. Think of it like buying a business that already has projects in the works and a pipeline for future developments. This isn't a small deal either. The whole transaction is pegged at around $379.6 million, though that number can flex a bit with typical adjustments. What is really interesting is that they've already completed the first part of this deal called the first closing, which happened on the 5th of December 2025. In this initial phase, they and their partners put in a hefty $202.8 million. This got them ownership in 4 completed apartment and student housing properties, and importantly a good chunk of Toll's development pipeline. Both what they own now and what they plan to buy. Now let's talk about Kennedy, Wilson's own wallet. Their total expected investment in this whole acquisition could come in around $126.3 million. Of that, they already put in $102.5 million in that first closing. This includes a $25 million deposit they had made earlier, with most of that deposit being applied to their investment. They are planning to wrap up the rest of the deal in December of 2025 and January of 2026. But, and this is a big but, there is no guarantee they'll finish all the closings. That is a standard disclaimer to be aware of in these types of deals. When all is said and done, if everything goes through Kennedy, Wilson and its partners are set to acquire a total of 18 properties. This isn't just a few buildings, it is a significant portfolio of 17 apartment buildings and 1 student housing property. This collection of properties, they're calling it the property portfolio, will have about 5,056 units once everything is built and ready. Plus, they're getting a bunch of properties that are already under construction, adding another 1,008 units to that. Beyond the completed properties, they're also scooping up Toll's entire development pipeline. This includes land they are buying and a whole lot of future development opportunities. They're looking at buying land and getting into the 24th of September ARI purchase agreements for new land. It sounds like they'll be taking on a significant stake in these future projects, with their ownership interest expected to be pretty high. Maybe around 95% initially, before bringing in partners later, potentially bringing their stake down to between 5% and 20%. This is a strategy to grow their development business without having to fund it all themselves. As part of this deal, Kennedy Wilson also signed an agreement to manage certain apartment and student housing properties that Toll will still partly own. So Kennedy Wilson isn't just acquiring, they're also becoming a property manager for some of Toll's existing assets. They'll earn fees for asset management, development, construction, and even success and financing fees. This adds another layer of revenue generation to the deal. And here is a crucial part of acquiring any business, the people. As part of this first closing, a bunch of Toll Brothers apartment development employees, including their top leaders, have officially joined Kennedy Wilson. This team will be responsible for running the newly acquired properties and continuing to grow Kennedy. Wilson's rental housing development business, bringing in experienced talent, is often a key factor in making these acquisitions successful. How did they pay for all this? Well, they used their own cash on hand or existing liquidity, as the report puts it, and funds borrowed from their corporate credit line. This tells us they are leveraging their financial resources to make this strategic expansion happen. Now, before we wrap up, every company filing has this section about forward-looking statements. It is basically a legal heads up that a lot of what they're talking about refers to future plans and expectations. And those things can change. They use words like may, anticipate, and expect. They're telling us that while they believe these plans are solid, there are risks and uncertainties that could mean things don't turn out exactly as they predict. It is important to remember that these statements are not guarantees of future performance. And finally, the report needs to be signed off by someone responsible. In this case, Justin Embody, the Chief Financial Officer, has signed on behalf of Kennedy Wilson Holdings. So, what is the story here, Kennedy? Wilson Holdings is making a big bet on growth in the apartment and student housing development sector by acquiring a substantial chunk of Toll Brothers' platform. This means more properties under management, a larger development pipeline, and the integration of a skilled team. The immediate financial outlay is significant, but it is about positioning for future earnings and management fees. The key risks are whether they can successfully integrate Toll's business, execute on the remaining closings, and whether the broader real estate market continues to be favourable for development and rental income. In my view, this is a bold move that shows Kennedy. Wilson is serious about scaling its development arm. They are clearly looking beyond just owning properties to actively developing and managing them, which can be a more profitable strategy if executed well. The ability to bring in experienced personnel from Toll is a major plus. However, the reliance on partners for future pipeline capitalization and the inherent risks in large development projects mean they need to tread carefully. The next year or so will be critical in seeing how smoothly this integration and expansion proceeds. Alright, that is our breakdown of Kennedy. Wilson Holdings' latest filing. What is your take on this acquisition strategy and what it means for the company's future? Drop your thoughts in the comments below. If you found this deep dive valuable, please hit that like button and subscribe for more corporate intelligence, and don't forget to join our Discord community. It is linked in the description. Thanks for watching, and until next time.